Hi everyone, how are you? Sorry about that. I was just checking a cable. Good afternoon, everyone. My name is Huzefa Hamid. I am the senior analyst for Daily Forex, and welcome to today's webinar. So, in today's webinar, I'm going to be covering a topic about trends. Just before we get started, though, I really want to give you an idea about. Sorry, just go through a quick risk disclaimer. Excuse me. So the risk disclaimer, it's a standard risk disclaimer that you've probably seen on 100 sites before. And it really is pointing to the fact that today's webinar is for educational purposes only. So it's not designed to give you investment advice or trading tips and so on. And remember, there is a risk of loss when you're trading derivatives or trading products on margin. Okay, so standard risk disclaimer. So before we get started, a little bit about me and who I am. So again, my name is Huzefa Hamid. I'm a senior analyst for Daily Forex. Now, I'm primarily a Forex trader. I trade all the majors, 7 of the major pairs and a bunch of crosses. I monitor about 25 to 27 Forex pairs, but really I focus on less than a dozen, and most of my trades are on the major pairs. So when I say major pairs, I mean pairs against the US dollars. I also look at a couple of futures contracts, the S&P 500, natural gas, crude oil, and a couple of others. Now, I use technical analysis for my decisions. So what that means is that I focus on primarily the price chart. I don't keep many indicators on this. I'm very price action oriented. I look at the economic calendar, but only as a view to looking to see what announcements will affect which pairs. But I don't analyze the economic numbers. So I'm not looking at things like the CPI numbers or GDP numbers, interest rate announcements, etc., to figure out, okay, how will that drive the markets? I'm thinking, okay, these are the main announcements. If this particular pair looks like it's going to break out or is already in a trend, this is a good pair to watch, given the announcement will probably give it a little bit more impetus, a little bit more volume along the way. I'm based in Toronto, Canada. I'm always curious. There's a good couple of dozen people on the call today, so I'm always curious to see where people are from. So if you have a second, type in the chat window just the city or the country you're from. I'd love to know where you guys are. Anybody here in Canada? Cape Town, South Africa, Atlanta, Georgia. Dr. Tosin is like London, England, I'm assuming, not London, Ontario, because there's a London here in Ontario as well. I grew up in London, England. Fatima from Nairobi, Kenya. I've been to, so my family's in Kenya, my extended family, my grandmother's in Mombasa. Tosin, England, it is England. Denver, Colorado. Barry from South Africa. Got a couple of people from South Africa today. South Africa, Newcastle. South Africa, Johannesburg. We were a big South African contingent. Jehan from Sri Lanka. I've been to Sri Lanka a couple of times for 2 weddings, actually, and I had so much fun. They were both in Colombo. Melbourne. So Nathan from Melbourne. Hi, Nathan. Nathan, Australia. Principally Sydney is on my to visit list. I've got 2 cousins there who moved away from England, who moved to Sydney. All right, that's a pretty international crew. Thank you. I was hoping somebody would be in nearby to me for a coffee, but obviously everyone's like a good few hours flight from me. Okay. All right, great stuff. Norway from Nigeria. Apologies if I mispronounced your name there. Nice to meet you guys. Okay, trends and how we spot them. So trends is really the first thing you tend to learn about when you're learning about the market. The first thing people say, okay, find a trend, trade a trend, and that's where the money is. And that's accurate, and it's a little bit oversimplified. So I want to give some context and some details on how you find trends, what you should do with them, when you should get into them, when you should get out of them. And really, we're going to begin with the anatomy of a trend. So I really want to break down what a trend looks like and what you should be looking for to see if that you're in a trend. So typically when price moves from point A to point B, it's not going to move in a straight line. It's going to zigzag up on its way there. So that's what a trend looks like. Now, if you're looking at an uptrend, the key definition of an uptrend is you've got higher lows. Now, a lot of people think of higher highs as an uptrend, but it's really you're watching the support levels rise, and that's what defines an uptrend. Somebody 20 years ago at a seminar in London, England, I'll tell you, it was actually a guy called Chris Manning. I don't know if anyone's heard that trader's name, but he was running a bunch of seminars through Europe and the US. And the way he got us to remember this idea is that when you're going up an escalator, you're looking up at people's bottoms. It's not the classiest way of thinking about it, but it's stuck in my head. So that's how I remembered higher lows to define an uptrend, or you're seeing rising support levels. And then conversely, for a downtrend, you're then seeing lower highs to define a downtrend. Now, the way to remember that is when you're going down the same escalator, you're looking at the tops of people's heads. So that's a way to remember the fact that you're actually looking at lower highs for a downtrend, and you're looking at higher support levels for an uptrend. So here's a very textbook trend. It's the US dollar yen. This is a major pair. It happens to be a 15-minute chart. So you can see from the top left, that's when the trend starts. You get another lower high, another lower high, another lower high, again another lower high, and then eventually that last lower high breaks. Now, that doesn't necessarily mean that the trend, the price won't continue to go down, or will go sideways or go up. What it is indicating is that this trend, this segment of the trend, is now exhausted. That's done. And you can also use a trend line to look at the angle of the trend, the steepness of the trend. I prefer marking out the lower highs personally. It gives me an idea, and then I'm always looking at the last lower high, and to see when that gets broken, to see if that trend line is, or that segment of that trend is now done. So if the last support line gets broken, I'll go back a screen. If this last support line gets broken, so here's your support, and it gets broken in this purple area. Let's say I'm short, maybe I should be getting out of my short position, or maybe I should be if I'm looking to get short in this market, maybe I want the trend to reestablish itself. So when you break down a trend, so this is an uptrend. When you break it down, you can see there are moves in the direction of the trend and then moves counter to the direction of the trend. So the moves that are counter to that are in the direction of the trend, those are called impulsive moves, and the moves that are counter to that are called corrective moves. So you might have heard these terms in the context of Elliott wave. I'm not using it as an Elliott wave idea, but this is an impulsive move is in the direction of the trend, and a corrective move is in the opposite direction. And there you have it in the downtrend as well. So you've got the impulsive move in the downtrend, and then you've got the corrective move in the uptrend. So first thing I want to break down is, so when you're looking at a trend, how do you know if you're in the impulsive section or this is a strong impulsive section? What are the characteristics? And there are three characteristics of impulsive moves. The first characteristic of an impulsive move is that the candles are mostly of the same color. So the candles in the impulsive section are of the same color. Second characteristics is that the candles mostly close near the direction of the move. So if it's an uptrend, you want to see the candles close near the top of that move. And we're going to look at an example in a second. And the third characteristic of an impulsive move is that the largest candles in the trend are within that impulsive move. So here's the EURUSD. Now, this is a longer term chart. This is the daily chart. So each candle represents a day. And you can see how the price went from A to B. And here in this section, hopefully from what I've said, those three characteristics, you get most of the candles are in the same color. Most of the candles close near direction of the move and you look at those characteristics, you can see there's the impulsive section of that trend. So hopefully this is making sense to everyone now. And if you have questions while we're going along, feel free just to interrupt me as we're going along, or just ask those questions in the Q&A. Hopefully we're well into COVID now, so hopefully everyone has a good idea of how to use Zoom or a product like Zoom. So just ask a question in the Q&A pod or just in the chat window. I'll be happy to pick those questions up. Okay, so now let's look at the corrective section of that move. So what is the corrective move? Now with the corrective move, you really got the opposite characteristics of the impulsive moves. Instead of having candles that are mainly the same color, you've got a mix of candle colors. Candles tend to have longer wicks, so they're more indecisive, and the candles tend to be shorter. So looking at, we're going back to the same chart now. You can see the characteristics in that impulsive move. 80% of the candles are the same direction. They close near the highs, and they have the largest candles tend to be within that section. Now you can see there's the corrective move now. So now you have a mix of candles. You have candles with longer wicks, and you tend to have shorter, these kind of shorter, more of these shorter candles within that space. So there's a corrective move. From point A to B, you've got a single impulsive move. Now you've got a corrective move. When you see that corrective move, you can mark out that support area. It's the impulsive move, corrective move, and then you've got the next impulsive move around there. So you've got the, again, now you've got a range of candles that are starting to, or a sequence of candles, I should say, that are longer, that are mainly in the same direction, and that close near the high. So 80% of these candles, more than 80% of these candles here are now in are the same color. And then you start getting a mix of candles. You can start to tell that now this is another corrective sequence that that is built up. So when you're ever looking at a trend, you got an impulsive move, or a move in the direction of the trend, and then a corrective move. So keep those characteristics in mind, and you can kind of start to decipher when you see a trend developing. You can pick out those three characteristics and see which part of the trend that you're in. So that's the next impulsive move. Here's the GBP, same kind of concept. And this is an actual live trade I took. So I'll explain the, I'll explain how I broke down this trade. This is the pound dollar 15-minute chart. So we're looking at the early hours of the morning from, well, it's the very early hours of the morning for me. I'm in Eastern time in Toronto. So London, England, 7, 8 in the morning, 2, 3 in the morning, my time, point A to point B. So out of the Asian session, the London opens, a big dose of volatility, of order flow that drove the price down. And you have a bunch of candles that gave you your first impulsive move. And the next thing that happens is you get a corrective move. So when I saw this corrective move developed, it was nice and short, it was a mix of candles, candles with longer wicks. So I got in around here with the assumption that the trend would continue down. And I just stop around here. So it took a little bit of heat, and then there's the first impulsive move, and there's your second impulsive move down. Okay. So when you look at a trend, you're looking at higher support levels, or higher lows or lower highs, depending if it's an uptrend or a downtrend. So essentially what you're doing is you're marking out small support and resistance lines. So we're going to really start honing in on the support and resistance aspects within a trend to help identify where we are. So one of the things I want to talk about is something called role reversal that happens. So this is an uptrend. So when you look at this trend, it'd be interesting to see what you notice about this trend. So what I see is an area where there's a resistance. The resistance got broken, and that resistance then got tested as support from the other side. Now, this is obviously a very oversimplified diagram, but it happens a lot within trends. It allows you to find a place to jump in on a trend when it does happen. It's one of my favorite methods of trading. So what the psychology behind the market is that you've got this resistance area. You've got a lot of sellers here, And when this is broken, these sellers, these short traders, they can get out of break even here. So very often that's why you get this roll resistance of resistance turning into support. So let's look at a gold. This is gold chart daily, and we'll look at this concept. So going back, so here's your downtrend. So there's an uptrend going into September, October, and now the price started falling. This is going back 2017, 2018, and then the price started falling. So you get a new downtrend developing. So you see a support line that was made right here, moves up, higher low. So if we look at just this area here, you've got this high there. Whoops. Let me go back a click. You've got this high there, higher low. And then the support gets broken and it gets tested as a resistance zone. Just not that neat, but you could have, once you got in, once you tested it, you could have put in a short trade here. There's your stop. You've got a downtrend that's developing. Same here. This is a lot neater. Support gets broken, comes back up, tests it as a resistance. Doesn't quite reach it, but you've got points there where you can look to. Certainly the second time, it didn't reach it the first time. The second time it came back up. You've got a corrective structure here. There's your impulsive structure going down. You've got a corrective structure here. And second touch, there's an entry point here. You might not have got in here, but when it came back up, you got a second entry point here. And then the price just collapses. In this case, when it collapses through, you really don't get a touch back up here. So really, this trend is getting quite extended. Just this is the pound dollar 4-hour chart. So I'm going to just run through a bunch of examples because the diagrams are useful to get for getting the principle of the trade, but charts tend to be in real life, as you sure you know, they tend to be a lot messier. So this is the pound dollar uptrend, hits a resistance area, breaks through, touches it as a support, breaks through once, but it doesn't close it. I mean, if you notice, the closes are right at that previous resistance as support. So this is an area that I would, for me, this is a buy. Cletus, you're asking, apologies if I mispronounce your name, it's a buy. So for me, this is a buy. It was trending up to point A, makes this resistance, making higher lows, as you can see. You got two level, two highs that are level, so you got a resistance building, but when it breaks, it really tests this area as a support. Then it closes at the support level. For me, that was a buy. Cletus, let me know if that makes sense to you, my logic, or if you want me to explain it again. I'm happy to. This is an interesting example. This is the pound dollar on the 15-minute chart. So this is what I've done is I've zoomed in. This is the A and B point, and I'm going to zoom in now to this area here so you can see how you could have bought into the market. This is the B point, breaks through, and you can see these touches at that B point on the 15-minute chart. So price is trending up on the 15-minute chart, breaks that resistance, the previous resistance. There's a great buy point here. Fantastic. Thanks, Silver. I appreciate it. So higher lows. You get these highs. Sometimes they're higher, sometimes they're kind of level. But the key thing is you're getting higher lows all the way through. It gets a bit messy at times, but breaks that resistance point. Nice big breakthrough candle, comes back down on this 15-minute chart, really touches it nice and evenly. For me, that's a clear buy. And then you see next thing, you've got an impulsive move. So these areas here, this trend isn't particularly neat, but it is a trend. Like some of these impulsive moves, the short, this is technically an impulsive move, but it's hard, there's still some short candles in there. And there's a bit of a pause. But when it breaks through this big impulsive candle through point B, and it comes back down, that to me, and then it really kicks off with another impulsive move. Lena is asking, hi there, how do we know if it's going to break or it's going to reject? So that's a good question. Okay. You don't always know 100%. What you're looking for is for factors to line up in your favor. So in this case, I really felt that there were enough factors that lined up in my favor. There were higher lows. There were some impulsive moves. Well, there's an impulsive move here, impulsive move there. But there's some messy moves in between. But when it broke this B point with such an impulsive candle, a single candle that really pushed through, that said that order flow was there, and it came to test it. The second touch, it tested so neatly. That to me, I thought there's a high likelihood that the price would then move up. Of course, I could be wrong, and that's why you always have a stop loss. You always mind your risk. You don't put everything into a single candle because you don't always know 100%, Lino, whether it's going to break through or not. But there were enough factors for me on this pound dollar trade for me to say, okay, I think this is where this is going. Similar concept, Aussie dollar, US dollar. This is a major pair. This is a major pair. Resistance formed. A low you've got here, a higher low. Okay, so there's an uptrend. You got a bit of a higher low here, but what I liked about this resistance, I marked out this resistance, and there you go, and it pushes back up. Timalayan, so how do we know how to draw our line? It takes a bit of practice, and I've done an entire webinar on drawing support and resistance line. And in the space of 30 minutes, it's hard to squeeze all of that information in. But it's a part of it is I want to see where price reacts. So I felt that here, this is an important line because price came up and it reacted really hard. So there's a lot of order flow going down. There's a lot of sellers that are pushing their price down here. So that's where I drew this line. This is why this line was important to me, as opposed to say this line. And so when it did break through, I thought that breakthrough was an important break. And when it came to test it, like after these candles, it said, okay, this is a firm. And it was such a neat line. That's why I was confident getting in here. Hi, David. Yeah, going back to GBPUSD, did you have a question about that, David? I'll come back to you. Do we draw it on the bodies or the shadows? I tend to draw it on the shadows. Occasionally I tell you when I use the bodies of the candle, I use it for daily charts or weekly charts. I look at the closes. So in the but intraday charts, 4 hour, 1 hour below, always the shadows, not the bodies for me. Daily, weekly, if I find a series of candles have got closes in the same region, then I'll draw it on the bodies. And then you can go to the line chart and that'll show you the closing prices as well. So one of the things to always remember with trends, and this is true for anything, reversals, price action, higher time frame trends will dominate lower time frame trends. So if you are in a short-term uptrend, but the larger time frame is down, there's nothing to say you cannot take the downtrend, the uptrend in the short time frame. But remember, you're going against a larger time frame. You want to have tight stops. You want to take your maybe 1 or 2 risk units of reward, and not this. Keep in mind that you'll be looking to get out before the higher time frame trend kicks in. If you're going to go counter against a higher time frame, the best trades are when you've really got lower and higher time frames that are in sync with each other. So the way I plan my trading out is these are my long-term time frames, weekly, daily, 4 hour. My short-term are hour, 15 minute, and 5 minute. I do my analysis on the big time frame, and I go for the execution on these lower time frames. David, I'm looking at your question. Swing high was broken to the upside in the daily time frame. The market came back to the point. Thanks. Yep, I think I know what you mean, but feel free to come back to that. Okay, so I've covered some basics of trends. We're getting up to 27 minutes past the hour, so we've got a few minutes left. There's a lot of things I can't cover, so just because of time. So I want to give you some further resources. 8cap, the broker, 8cap.com. They have a section called a learning section with trading education overview. And they've written an article in June of last year where they describe how to use moving averages and RSI, the indicator, to capture trends. So if you go to 8cap, you'll see the learn tab there in green, and then trading education overview. And they wrote an article. Nick Alexander, one of the market analysts, wrote this article, Trading 101, Trading with a Trend. You can scroll down and they've got an example of how they use moving averages. 2 moving averages, they've got a pound dollar 4-hour chart example with the RSI and the 50 line. So if you read through that article, I'm going to give you the 8cap link actually, so you have it and you can. I'll give that to everyone in the room. There you go. And the other link you can go to is FX Academy. The fxacademy.com has a bunch of articles on trading with the trend. If you just want to explore this topic in greater detail, hopefully that will help. Some final thoughts. If this is my mantra for all trading, if the chart isn't clear, stay away. So it's interesting when Lino asked, do we draw the bodies and or the shadows? How do you know where to draw the lines? Honestly, there are times where I think there's a trend developing and I'm not sure. So I just stay away from that chart, or I stay away from that time frame. And no matter how much, the markets can be messy. The markets aren't designed to serve us as traders. They're designed as a way to facilitate international commerce, etc. So we're looking at a very messy snapshot of buyers and sellers and a lot of psychology going on in there between the two. So if it's not clear, it's fine to stay away. Even if you feel you're experienced, there will be many times, more often than not, in fact, where the chart isn't clear. Always mind your risk. Always make sure you have a stop loss. You have a good, you have targets which are higher than your stop loss. So you got positive risk reward ratios. And anyone wants to contact me, I was hoping somebody in Ontario. Nobody's in Ontario in this group, but that's fine. Give me a shout on josefa@dailyforex.com if you've got any questions about this, any comments or thoughts. Appreciate feedback. This is my 7th webinar now for Daily Forex. And I like to think I've improved as along the way, but a lot of that improvement has come from people giving me comments about where they got lost or what they found valuable, and that's helped me develop the content for this. And the other thing that we're doing right now, Daily Forex is now opening. They're going to open the poll, and you can just give feedback on the poll. So if you've got a second, please give us your feedback. How did you find this webinar? And that will help us just develop better content for you guys. Thank you very much for attending today. I appreciate it a lot. And it is a Tuesday at the end of January. Hopefully this year is going to be less interesting than 2020. Hopefully it's a bit more subtle for everyone. Great to meet all of you guys, and hope to see you around soon at a future webinar. Bye now.